Very good afternoon to the viewers of today's VCM on very important topic. And of course, it's a research, receiving the suggestions on research proposal on the emerging role of auditors and CFOs in addressing risk management, a new perspective hosted by Pali branch of CRC of ICAI and organized by Research Committee, one of the oldest technical committee of the Institute of Chartered Accountants of India. We have the galaxy of panelists with us, including my chairman, C. Anuj Goyalji, our very learned CA, CS, ICWA, and many more qualification, the expert, Ravind Pawar sir. And today we are fortunate that my special guests as well as my chairman both are the member of all the three institute and having many other qualifications. So we have the presence of hosting branch chairman, Pali branch chairman Ruchir Baheti ji. We have Lalit ji, vice chairman. We have Dalpat Raj ji, Sikasa chairman. We have Dhanpat Gadia ji, and we have Himanshu Garg ji. I think I have covered all the dignitaries on the panel. So, not taking much time, I request Ruchir Baheti sir, Chairman Pali branch of CRC of ICAI, for his welcome address. Sir, you are on mute. Baheti sir, you are on mute.
Thank you, Amit sir. Hello friends, a very good afternoon to all of you. I, C.A. Ruchir Baheti, Chairman of Pali branch of CIRC of ICAI, welcome you all on this today's virtual CP meeting on inviting proposals on research proposal on the emerging role of auditors and CFOs in addressing risk management with a new perspective. Friends, this webinar is organized by under the aegis of Research Committee of ICAI, which is one of the oldest technical committee and hosted by our branch. For this, we are very grateful to Research Committee for allowing us. Friends, today we are privileged that our esteemed Central Council member, C. Anuj Goyal sir, who is also the chairman of Research Committee and also chairman of Capital Markets and Investor Protection Committee, has given his consent to grace this occasion with his august presence as a chief guest. And I heartily welcome you on behalf of all of us from Pali branch. Friends, I also welcome our eminent speaker of today's, Ma'am Dr. Madhu Vij, who is a former senior professor of finance with Faculty of Management Studies, New Delhi, who will take us through the topic of today's webinar. I also welcome CACS Ravindraji Zakar sir for giving his presence here. Friends, I am sure this meeting will be very useful for us. Thank you very much again on behalf of Pali branch. Over to you, Amit sir.
Thank you, Chairman sir, for your welcome address. Now I request CA Lalit Talesra sir, Vice Chairman, Pali branch of CRC of ICAI, to kindly introduce our learned speaker, Dr. Madhu Vij, ma'am.
Yes, ma'am. Thank you, sir, it's my privilege to introduce our speaker of the today's sessions. Professor Madhu Vij is a former senior professor of finance with over 4 decades of experience at Faculty of Management Studies, University of Delhi. Her professional and teaching interests include the area of international finance, risk management, banking and financial services, corporate finance and accounting. She is a government nominee, the Institute of Company Secretaries of India. She is also a member, Board of Governors, Arun Jaitley, National Institute of Financial Management. At present, she is Academic Council Chair, Global Risk Management Institute, Gurugram. She is an independent director for 4 private limited companies in India. She was an independent director in MYL from 2010 to 2013. She was on the panel of judges for the award of Prime Minister's Trophy for the best steel plant for 2 years, 2011 to 2013. Over to Amit sir.
Thank you, Lalit sir, for giving a very informative introduction of worthy speaker of the day, Dr. Madhu Vij. Now I request CA Dhanpat Raj sir for kindly introduce our worthy chairman, C. Anuj Goyal ji.
थैंक यू सर। वैसे तो आज मैं सभी का स्वागत करता हूं, बट आज मुझे सी अनुज सर का स्वागत करने का मौका मिला है। सी अनुज सर इज अ सेंट्रल काउंसिल मेंबर ऑफ इंस्टीट्यूट ऑफ चार्टर्ड अकाउंटेंट ऑफ इंडिया with his 14 year in council and 3 year in regional council, 6 year in a branch. He contributed immensely in various capacities. Presently, he is a chairman of research committee and oldest committee of ICAI and the capital market and investors protection committee of ICAI. He is also chairman of corporate law and corporate governance committee. With extraordinary academics, he possesses CA, CS, CMA, LLB, MCOM, DISA, DIRM. Thank you.
Thank you, Dhanpat sir, for giving a brief intro of my chairman, C. Anuj Goyal ji. Now I take privilege to introduce a similar kind of personality, very learned professional, CA Ravindra Pawar sir, who is a very, very senior member of the profession, who is a chartered accountant, company secretary, ICWA, and almost all the diploma of Institute of Chartered Accountants, post-qualification diplomas and LLB and many other qualifications. So I would urge him to kindly guide us and address the audience and grace the occasion with his words of wisdom. Over to Ravindra sir.
Good afternoon to everybody, and my special respect to Chairman Research Committee Anuj Goyal ji, Madam Madhu ji, and the Pali branch office bearers. I am really happy that a small branch like Pali are contributing to so much to the research, and this is the topic which is the real backbone of the profession. If we don't come to the expectation of the stakeholders by minimizing the risk of every type, not only of financial type, every type, because so many faith by laws, by the society, by the stakeholders have been posed, and they expect so much from professionals. Professionals means whether chartered accountant is working as an auditor or CFO. It is the two sides of the same coin. They are to perform their responsibility in very matured way, very innovative way, so that the faith is posed and we can prove our utility to the society. Only then we can ensure the sustainable growth of this profession and of the economy. With these words, I appreciate the efforts of the research committee, and we are fortunate enough that a doctor, a research scholar, is the secretary of this committee, and I am hopeful that this research team will prove to be very useful to the profession and to the society. Thank you very much.
Thank you, Ravindra sir, for your guiding words. Really, it is a motivating for all of us to do something extra in the field of research domain. With these words, now I request my chairman, C. Anuj Goyal ji, for his ice-breaking session and opening remarks.
Thank you, Dr. Amit Kumar Agarwal ji, our young and dynamic secretary of the research committee, as well as committee on capital markets and investors protection. We are having the presence of C. Ravinder Singh Pawar ji, very prominent professional, my elder brother, and is contributing like anything for the cause of the profession. So I, on behalf of the Institute of Chartered Accountants of India Research Committee, welcome our honorable special guest, C. Ravinder Singh Pawar ji. We are having the presence of Dr. Madhu Vij ma'am, who is contributing like anything for the cause of the research in our endeavors to really do something concrete in the field of the research. She has already undertaken a very, very important research project, the emerging role of auditors and CFOs in addressing risk management in new perspective. And we are having, of course, the leaders of the profession from Pali, one of the very, very important branch of central region from the state of Rajasthan. Our honorable chairman, young and dynamic chairman, CA Ruchir Baheti sir, CA Lalit Talesra sir, honorable vice chairman of Pali branch. We are having the presence of Himanshu Garg, secretary Pali branch, and CA Dhanpat Raj, Sikasa chairman, Pali branch. And we are having the presence of CA Amit Agrawal ji, who is contributing like anything for the cause of the profession in the research committee. And all our honorable viewers from each and every part of the world. We are having around 5,000 chartered accountants present in today's virtual CP program from each and every part of the world. So that shows the dedication, devotion, commitment of the members of the Institute of Chartered Accountants of India, who are undoubtedly the best accounting professional across the globe. And in this time of corona pandemic also, if we are having the presence of more than 5,000 chartered accountants, that shows how the chartered accountants are trying to convert this threat of corona pandemic into an opportunity. They are trying to learn, and when they will be updating their skills in the best possible manner, I think it will not only be good for themselves, but will also be good for the trade and industry. It will be good for the economy, and ultimately it will be good for the profession and in turn for the nation. And if we want to reach to the target of the 5 trillion economy of the Prime Minister Modi, I think the best of the accounting professionals, the chartered accountants, are supposed to contribute in a great manner. And I'm quite confident that the way the chartered accountants are taking very, very keen interest in the research activities of the Institute of Chartered Accountants of India, that day is not far, that in spite of this corona pandemic, we will be in a position to reach to the 5 trillion economy at the earliest. So I once again welcome all our honorable viewers present from each and every part of the world, C.A. Ravinder Singh Pawarji and all the leaders of the profession from Pali, Ruchir Baheti ji, Lalit Talesra ji, Himanshu ji, and Dhanpat Raj ji, and Dr. Madhu Vijme. And friends, this topic, receiving suggestions on research proposal on the emerging role of auditors and CFOs in addressing risk management, a new perspective, is very, very important. And Dr. Madhu Vijji is doing the research under the ICAI Research Project Scheme 2021. Friends, we must be aware that Institute of Chartered Accountants of India, during its journey of 71 long years, has achieved a remarkable height, has strongly come out as a partner in nation building, and now stands tall behind the strong global standard of Indian economy. The chartered accountants are contributing immensely towards cause of the nation and the profession. Research Committee of ICAI is one of the oldest technical committees set up in 1955. Ravinder ji, it was the only technical committee of the Institute of Chartered Accountants of India. All other technical committees were practically the part of this research committee only. And this research committee was formed with a view to undertake research activities to improve the quality of services rendered by the profession. I am quite confident that last year, when the president of the institute entrusted me the responsibility to chair this research committee, and Dr. Amit Agrawal ji was given the responsibility as the secretary of the research committee, we tried our level best to come up to the expectation of the nation. Because when the statutory body like the Institute of Chartered Accountants of India is having that responsibility, when the ex-president of the country, APJ Abul Kalam, says that the Institute of Chartered Accountants of India and chartered accountants are a real partner in nation building, I think only and only the research committee is supposed to be the backbone of the economy of the country, and we are supposed to prove that we are real partner in nation building. So I am quite confident with the able support of all our honorable viewers from each and every part of the world and very, very prominent Pali branch. Pali branch is a comparatively a smaller branch. It was earlier the part of the Jodhpur branch. Correct me if I'm wrong. But in a very, very short span of time, the way we have contributed for the cause of the profession, I think it is really something really great. So friends, as rightly remarked by one of the renowned philosopher, Rich Simons, knowledge alone is not the power. The sharing of our knowledge is when knowledge becomes powerful. So we are trying our level best to see that how our resource persons, how our researchers can share their knowledge. And this will be not only good for the chartered accountants, but also for those resource persons who are sharing their knowledge, because they will certainly become powerful when they will be sharing their knowledge. So I will urge all our honorable members, all our leaders from Pali and other parts of the country to see that how we can try to have the knowledge sharing, because knowledge sharing is one of the most important USP of the members of the Institute of Chartered Accountants of India. We are the best accounting professional across the globe. There is no second thought about it. But the knowledge updation, which we do undertake on day-to-day basis, in spite of this corona pandemic, if we are updating our knowledge on continuous basis, I think due to that, we can understand, we can have the expertise in each and every aspect of whether it was GST. Of course, we are not talking on the GST, but if the GST could be implemented, if the GST could see the light of the day, and if the GST could be implemented successfully, in spite of all the hiccups, in spite of all the drawbacks, in spite of all the changes on day-to-day basis which took place, I think it is only and only our research to really understand something, search each and everything. And the chartered accountants who were there in the direct tax field ultimately come forward to serve the nation and got the expertise even in that field which was never their domain. So with an aim and vision to continuously update and upgrade the professional competency of members at large by sharing knowledge, the research committee endeavors to conduct professional courses, workshops, training programs, and virtual CP meeting and webinars for the cause of the profession and nation. Now, before going into the essence of today's session, I would like to share some of the initiatives of the research committee, which may be quite significant for the membership at large. As I was discussing, that last year I got the responsibility to chair this very, very important research committee, oldest technical committee of the institute, and Dr. Amit Agarwal as the secretary of the research committee, and CA Amit Agarwal ji, who is a very, very important pillar of the research committee. We introduced ICAI Doctoral Scholarship Scheme. ICAI Doctoral Scholarship Scheme is open for all the members of ICAI who are pursuing PhD and are not more than 40 years of age on the last date of application. ICAI Doctoral Scholarship Scheme aims to provide scholarship to the eligible candidates having outstanding academic record in 10th and 12th standard and an inclination and commitment to undertake research in the areas such as auditing, taxation, commerce, management, and accounting discipline. Friends, a scholarship of rupees 50,000 per month for 3 years will be given to 5 scholars. And the last date for submission of this application has been extended to 31st August. So we are trying our level best to see that how the young researchers, young chartered accountants can come forward and do the research for the cause of the nation. And ICAI, the research committee, for the first time has come forward and introduced this ICAI Doctoral Scholarship Scheme. And I'm quite confident that our viewers will certainly come forward and will see that how we can try to do the research on the very, very important topic, which are important for the profession and are important for the nation. Then ICAI Research Project Scheme. In spite of the year badly affected by the corona pandemic, we introduced ICAI Research Project Scheme for the first time last year. This ICAI Research Project Scheme is open for the members having experience of more than 10 years, either in practice or in employment. And the maximum amount of rupees 10 lakhs will be reimbursed. There is no profit element. We will be only reimbursing the expenditure. The applicants will be given the time duration of 6 months for completing the research projects after the research proposal is approved by the research committee. And this scheme is open round the years. And friends, you will be very happy to know that in spite of the corona pandemic last year, and for the first time we introduced this ICAI Research Project Scheme, Institute approved 7 research projects, and all the 7 research projects were completed within the given time frame of 6 months, and all the research projects were good for the profession and in turn for the nation. And we have submitted, Ravinderji, our research findings to the relevant government departments, the state governments and the central governments. And I am really very happy to share with all of you that 2 of our chartered accountants have denied to even accept the reimbursement of expenditure. That shows our dedication and devotion for the Institute of Chartered Accountants of India, our alma mater. And 2 of the researchers were from other parts of the world, our brand ambassador of the profession in other parts of the world, and they also tried to do something very, very concrete in this research project scheme. Then, for the first time in the history of the accounting profession, we introduced ICAI International Research Award. The awards could be considered as the world's largest cross-border competition, with an objective to encourage and provide recognition to research scholars across the globe and their contribution in fostering research studies, leading to innovation and value creation. Ravinderji was also the part of this initiative of the Institute. And the scope of the ICAI International Research Award would be to identify the topics of international and societal importance, encompassing area of accounting, auditing, economics, finance, and taxation. We have received an overwhelming response of around 138 nominations, in spite of the fact that we got only 2 months. 31st May was the last day. We got the responsibility in the month of March only, and within 2 months, we got 138 nominations from each and every part of the world. And we believe that this initiative will be high-flying and contribute immensely to research domain. And let me tell you, friends, the president of International Federation of Accountants was one of the members of the international jury, and the immediate past president of IFAC was the chairman of the jury. Very, very powerful jury was there. And this year also, we will be having the international jury headed by the president of International Federation of Accountants, IFAC. And in IFAC, we are having more than 170 accounting bodies. And this year, we are trying our level best. Ravinderji, president has told that as we are having very, very strong presence of around 20,000 chartered accountants in Gulf countries, so we propose to have this ICAI International Research Award function at Dubai on 25th of August. So I look forward to have more and more contribution of all of you in our this endeavor. Then ICAI Awards for Excellence in Financial Reporting. Friends, ICAI through its research committee has been making sustained efforts since 1958. 60 years back, we introduced ICAI Awards for Excellence in Financial Reporting to promote high-quality financial reporting through the annual awards competition, wherein the entities are being recognized for following sound financial practices amongst their peers. And you will be very happy to know that for the first time in the history of the research committee, Dr. Amit Agarwal and C. Amit Agarwal both are trying their level best to see that how we can train the trainers. The technical reviewers, we are trying to see that how the technical reviewers who are evaluating the financial statements can be trained, and continuously for 7 days, 8 days.
It was 7 days.
7 days continuously. We had the virtual training program with the help of the best of the resource persons for all the technical reviewers who are there from each and every part of the country. So we are trying to see that how we can have the quality of the review so that the best result can come out. These awards are open for the corporates to submit their annual reports in order to recognize and encourage excellence in preparation and presentation of financial information. Friends, last year, we had received the highest number of entries for the awards in the last 7 years, in spite of the year affected by the corona pandemic like anything. And this year we have increased one category. A new category of municipal body has been incorporated, and the last date for submitting the entries is 30th September 2021. Dr. Amit Agarwal ji and CA Amit Agarwal ji has confirmed that they are trying their level best to see that in the history of the Institute of Chartered Accountants of India, we will be having maximum number of entries, maximum number of nominations for the ICAI Awards for Excellence in Financial Reporting, in spite of the fact that this year is also very, very badly affected by Corona pandemic. So I'm quite confident with the help and support of all of you, we will be getting the best of the entries. I will request all of you, we are having around 5,000 chartered accountants present in this our virtual CP program. So I will request all of you to see that how we can have the best of the entities for this ICAI Awards for Excellence in Financial Reporting. Friends, it gives me immense pleasure to share that Research Committee has awarded research project on the contemporary research topic of the emerging role of auditors and CFOs in addressing risk management, a new perspective under ICAI Research Project Scheme 2021. And with today's VCM on the said topic, we aim to share how the research will be carried out by the experienced researcher and receive suggestions from our participant members, which can be appropriately incorporated in the execution of the research project. Friends, risk management as a function plays a critical role in assessing, managing, and monitoring an organization's key business risks in order to prevent or minimize losses. As risk is present in all actions and activities of an organization, a firm commitment by the management and auditors to create a strong risk landscape in today's environment is the need of the hour to ensure long-term growth and prosperity of the organization. Friends, with the emergence of new technologies at an unprecedented pace, a new perspective of risk management in the context of evolving technology and data-driven experience in the last few years have prompted an important shift in the role of auditors and chief financial officers in organizations. Therefore, a need was felt to study the emerging and changing role of auditors and CFOs in addressing risks with the changing risk landscape owing to introduction of various emerging information technology, etc. So I believe auditors along with senior management need to take a holistic and forward-trending view on the emerging risk and risk management practices of an organization by looking into the future to both expand and leverage their skills in the areas of emerging areas of artificial intelligence, machine learning, data analytics, financial analytics, technology upgradation, etc. to address and develop best risk management practices in an organization. Therefore, today's VCM, we aim to holistically understand and receive suggestions and comments on the research proposal submitted by the researchers on the said topic. Now, friends, without taking further time, I would like to welcome today's dynamic speaker, Dr. Madhu Vijji, to fine-tune the concept and enlighten our knowledge with her words of wisdom and experience on the topic, receiving suggestions on research proposal on the emerging role of auditors and CFOs in addressing risk management, a new perspective. And I'm quite confident that all of us will certainly ensure that the chartered accountants and their family members are safe and are vaccinated. Our branches are trying their level best to see that how each and every chartered accountant and their family members can be vaccinated at the earliest, so that we can fight from this corona pandemic in a very, very effective manner. So I'm quite confident that all of you are safe at your respective places, and I will request all of you to please take very, very good care of yourself and your family members in this time of corona pandemic. So I once again welcome all our honorable viewers. Around 5,000 chartered accountants are there from each and every part of the world. I once again welcome Sri Ravinder Singh Pawar sir, our honorable special guest, and our guest speaker, Dr. Madhu Vijji ma'am, and our very, very dedicated team of leaders from Pali branch, C.A. Ruchir Baheti ji, chairman, our honorable vice chairman, Lalit Talesra ji, our honorable secretary, C.A. Himanshu Garg ji, and C.A. Dhanpad Raj ji, our Honorable Sikasa, Chairman of the Pali branch of Institute of Chartered Accountants of India. Thank you very much, friends.
Thank you, Chairman sir, for your guiding words, and really it's your greatness that all the credits you are giving to me and Amit. But let me share with the viewers that is the vision of my chairman. That a committee which was formed back in 1955, and last year very good initiative has been taken. This is because of his vision only. We are the person who, of course, tried our level best to implement the vision decided by the committee led by C. Anuj Goyalji. So all credit goes to the visionary chairman, my chairman C. Anuj Goyalji, who has guided us like anything. And let me share with you that today's generally we used to have VCMs on taxation, auditing, accounting, and other areas. This is the first time I could see. Generally, I am from academia, and then I joined the Institute of Chartered Accountants of India. There was a concept in research that when you are submitting a proposal, let's have some suggestion on that. So I think because he is heading in his personal capacity, he is heading some of the academic institution also. So he has a clear band of understanding on what should be the process of any quality research. So he had chosen this topic to receive suggestion from the membership at large at the beginning itself, so that a quality research can be ensured. So this is all the vision of my worthy chairman C. Anuj Goyalji and his surrounding like Pawar sir, Ravindra Pawar sir, who are the close friends. And I think because of the good surrounding of my chairman, he perceives such beautiful ideas that a Institute of Chartered Accountants of India kind of the professional institute can only thought of, because it is a very, very good idea that 5,000, I think, Madam Madhu will also echo my sentiments that this is although I am from academia, but this is the first time when any research proposal itself is receiving suggestion from 5,000 chartered accountants. So I think this is the beauty of this VCM, and as a secretary of the research committee, I'm quite confident that a good number of suggestions would be receiving to us, and we will improve this proposal. With these words, not taking much time, I request Dr. Madhu Vij ma'am for her kind words of wisdom and deliberation on the topic.
Before I share my screen, let me tell you, I am a little intimidated now, after hearing the kind of work which the Institute is doing and what all of you have done. I think I also look forward to the kind of suggestions. But let me start by a very good evening to all of you, to C. Anuj Goyalji, who was there in the research committee, and I am, absolutely amazed at the kind of work which is being done, because typically an academic institution can do these kinds of work, but a chartered accountant institute, and you have come a long way. So it's not that you have started now, it's been a long legacy, I would say. And then to Mr. Ravindra Kumar Pawarji, thank you for coming. Thank you for gracing the occasion. And to Dr. Amit Kumar Agarwalji, and to the Pali, to the Pali branch of the Institute, Mr. Ruchirji, Lalitji, Himanshuji, Dhanpatji, a very, very good evening to all of you. And I do hope, the proposal is up to your expectations, I mean, honestly, I tell you, one has worked in various areas. Like at a point of time, my core area was international financial management. I've done a lot of work on that. Then slowly, after 2014, one realized that risk management had become important. And it was in that context that I, thought of this work. In fact, when I was looking at, I'm not really an expert and not a chartered accountant like all of you. But, when I looked at the partial way in which the Companies Act was modified, the kind of importance that was given to enterprise risk management. And that was the time when, we had gone through a global financial crisis. So the global financial crisis of 2007-8, and prior to that, an Enron crisis. So, it was felt by the regulators. How and what could be done to ensure that these things are minimized? You can't really avoid them. So as long as the institutions are there, as long as there are rules and regulations, there'll be some places or some institutions or some individuals who will work out ways to work in a way which is not very complimentary. So that was the background in which my interest in auditors and risk management started. And the other was, when as a part of FMS, we did a few programs on enterprise risk management. And that was the time all of us, were a little on a clean slate. What is ERM? And the basic question which comes to one's mind in that context also is, how is it different from the traditional risk? So let me share my screen and then I can take off from here. Share screen. Can we see the screen now? Yeah, okay. So, okay, stop share and is that okay now? Okay. We've been hearing on this, the emerging role of auditors and CFOs in addressing risk management. Why I'm saying a new perspective is because there's a lot of literature which is already available on this. And being a researcher myself and having guided a lot of PhD students, I'll tell you, research is only a start of a journey. So all suggestions are welcome. And in fact, I would say I really look forward to these suggestions because, there's a lot of improvement which can happen in any work which is being done. So with these words, let me give a little background, as I said, on this area and how the whole interest developed and how it's not only my interest, it's about the area being relevant, the area being a requirement, So as I mentioned, the first was the global financial crisis, the meltdown, and the kind of after effects it had. And, there was a time when a lot of us also, when I would also teach my students, it would be a set theory, a set practice. And a lot of discussion after the meltdown was that we need to be a little more adaptable to different scenarios, to different situations. Now, that was the starting point, wherein, it was felt that the risk management strategy and how auditors and senior management approach risk need to be relooked. In fact, the lens through which we look at risk, the lens through which we look at, or the lens through which the auditors look at risk, needs to be reevaluated. So with this perspective, we started this, work on what is the role of risk management traditional risk management and enterprise risk management, as I was just mentioning. So, if we looked at the Companies Act, they mentioned specifically about enterprise risk management. And that was, as I said, the cue. That was, as I said, the starting point. Now, so one part of our study is on risk management. The other part of the study is on auditors and CFOs or senior management, if I put it like this. Now, having done a little survey of literature, I found that individually there were some, like the consulting sector, the KPMG or the EY or Deloitte, they keep doing some studies on role of auditors and risk management. And there would be another section on management or senior management and how their role has changed. So whether it was emphasizing risk or whether it was emphasizing technology, the focus was a little more in the same direction. What I thought was, or what we thought, that if we could intertwine these two, both of them occupy an important position in an organization. So if we could look at auditors and we could also look at senior management, CFO, finance, and other senior people, I think that could give us some clue, could give us some guidance as to what could be their changed role in the kind of new situation which is evolving. And let me put it like this. The pandemic or COVID, as we say, has only made all this a lot more necessary. Because COVID has shown us that low probability and high impact event are possible. In fact, if I take you a little back, COSO, the Committee of Sponsoring Organization, and they do a lot of work on this, and internal auditors, they, try to come out with rules here. In fact, they came out with the cube. What could be the important rules of strategy, operations, regulations, legislation, and so on and so forth. So, that, as I said, was a starting point. And an event like this, so as I said, the probability and the impact factor. So a scenario like COVID is a low probability, but a high impact kind of an event. And if you look at the kind of devastation we have had, I think it's beyond anybody's imagination. So even CA Anuj started by saying that. I hope all of you are safe. In fact, these days, the tagline is stay safe, stay at home. So that's how the mind and the perception has changed. So it's something like a black swan event, and that's what we are calling COVID. So there was a time all swans were white till a black swan was discovered. So even if 2 years back somebody had asked us, how would you plan for a completely unforeseen situation? We would have said, okay, let's see when it comes. And I'm sure you all, all of you in that senior position and being CAs would know that all companies has a crisis management plan, or a disaster recovery plan. And these crisis management plans rarely succeed when you put them to practice. Okay. So with this little background, let me start off the discussions on the emerging role of auditors and CFOs in addressing risk management. So I've briefly given you a context. One or two more thoughts on the context is that for the last few years, if I see, and this is a little more true for auditors, the role of auditors, or traditionally, if I put it, they are mainly focused on, I would say, topics related to compliance and internal control systems. So the focus is compliance, following the regulations. But in today's scenario, the focus needs to change to adding value to an organization, providing insights on key risks, which was not a priority earlier. So how do you provide insights? How do you add value? And I think this is another, a basic takeaway also, which I would want the participants to have. How do you add value to whatever work you are doing? And I think that is the changed mindset. And similarly, it is true for senior management also. If I talk of a finance officer, most of his time would be spent on cost, would be spent on other financial areas. But the decision-making part, the thinking part is always there, but not, with the kind of focus and emphasis we want. So what would I like to, do a little summarized version of what we said here is the new generation CEOs and the auditors need to understand the key risks of an organization and proactively try and manage them and add value to the organization. So, in the context of a new perspective of risk management which has evolved, and let me also say, this new perspective of risk management has evolved because if you see the kind of developments which have taken place in the last 2 years, I think is beyond anybody's imagination. So technology, data, big data, or artificial intelligence, machine learning, all of them probably a few years back, we would not have even visualized. So with this kind of, additional inputs, which all of us have, we need to change our, change our mindset, change our thinking. And as of now, or in today's context, I think we have no choice. So you innovate or perish. That is the tagline also. So if you don't innovate, the companies are. And with this perspective, I think, we need to look at the changing role and the new dynamics. Okay. Now, so what are we looking for? We are looking for a role for auditors and CFOs, which, as I just said, which is a part of overall strategy process, overall development process, and should be universally recognized as indispensable to effective governance, risk management, and control. Now, if we take into account all these three words, governance, risk management, and control, I think we would be probably looking at a complete holistic perspective of, our role, which we would want the auditors and CFOs to have moving forward. The point also is that an event like COVID has also shown us how the entire world is interlinked. We talk of trade. So we say, okay, there was a time when it was a company, and I would say, okay, a company is a domestic company. I'm not interested in what's happening in the world. I'm not interested in how their currency is fluctuation because my operations are only in India. No more now. So even if it's a completely domestic company, it will get impacted by what is happening internationally. You could be sourcing a raw material, you could be sourcing some other, or maybe your subsidiary. So the point is the entire set of economies are interlinked, whether in a good way or in a bad way. So the pandemic says We are all in it together. And that is also the message we need to. So if you're talking of the auditor's role or you're talking of the CFO's role, and we say, okay, in X country, it happens like this, there's no reason to say why it should not be the same in our country. And all this leads us to a very important dimension of risk. Please remember, and that is what we have kept as a focus in our work also, risk is not hygiene. Risk is not hygiene. It is not something which is necessary. Risk needs to be managed at the speed of risk. So remember, we say the only thing constant in this life is change. So it is in that context we are framing this. Risk is not hygiene. It needs to be managed at the speed of risk. So the context, I'm sure, should be a little more clear now. The context is the kind of impact which the pandemic, which the global financial crisis had on a lot of sectors, and the kind of impact which, all of them went. I was hearing even Anuji had talked about a perspective of this. And he very rightly said about the changing risk landscape. The whole landscape for risk has changed, both for auditors and CFOs. Now, the point is risk management, and I am also going to go, in fact, after a few minutes, maybe talk about the distinction or the relationship and what we are meaning by this new risk term which we are trying to use. The point is, risk management has suddenly not become important. So I'm not at any point of time, I'm not saying risk management has been leading for years together. It has been leading for years together. But the fact is, senior management or auditors spend very less time on emerging risks. So a lot of times you will say what the existing risks are. And if an existing risk has threatened us, we will have some policies to mitigate that risk. But what are the emerging risks? Now, that is something which we need to understand and probably go into a lot more detail. Post-pandemic, we really don't need to elaborate also the way all this has become important and how it has become a lot more important for the risk practitioners and for the people who are managing risk at various levels in the organization. So, how do we go ahead here? What is the way forward? So we need to take, so what do we want auditors and CFOs to do? They need to take a holistic and forward trending view of the emerging risk management practices. So existing risk and emerging risk is what becomes important. Let me just mention here, I was going through this ICAI vision document and, a lot of research which has been done by KPMG, Deloitte, and EY on the emerging risks for the next 10 years. And, they have all summarized, a lot of, dimensions which we are trying to emphasize. But the other important point which has been emphasized in all the reports is that you need to understand and manage risk so that you add value, allocate resources, and mitigate the risk. Okay. Let me go to the, okay. So this slide talks about the traditional role of risk and the enterprise role of risk, which has become important. COSO, way back in 2004, had given an importance of enterprise risk. We are going to use this as a good background for us. So let me start by giving you a little relationship, because when I say risk management along with ERM has become critical, and senior management and regulators have all started using integrated risk management, IRM as we call it. All this relates to the concept of ERM. If I were to give you a single definitional difference between traditional risk and ERM, it is about silos. Now, what is it about silos? Traditional risk is a silo activity, whereas ERM is a holistic activity. Now, what does this mean? What it means is that prior to this whole focus on ERM, the production department, the marketing department, the HR department, the finance department, each one of them would say, okay, these are the challenges. These are the risks which I am facing. So silos, which means each department had a risk in silo. But ERM doesn't think like this. It thinks of risk as a whole, which means what is the risk for the entire organization? So how does the production risk impact the finance risk and the HR risk and so on and so forth? In the traditional risk, which we were considering till now, risk was a sporadic activity. It was a once in a while event, like the pandemic. Maybe 10 years from now, we'll forget it. All of us now keep referring to the 1919 Spanish flu. And in spite of, the first wave, we all didn't take, the right precautions for the second wave. So the point is, the same is true for risk also. We tend to, assume that risk is sporadic activity. It'll occur once in a while. Whereas the focus after 2015 is risk is continuous. Remember? And that is what I mean when I say risk is not hygiene. It's not like brushing your teeth in the morning. No, it's not hygiene. That is the message they want to say. And the other is, the traditional risk, everybody thought, let us leave it to a middle level employee. No more. ERM has got to do with strategy. So I'm sure we understand the two words, and sustainability I heard was also mentioned. Sustainability, strategic decision, So I do remember when I would ask my young MBA students, what would you like to do? They'll say, we would want to be a part of strategy, because strategy means top board, top decision makers. So risk is a part of strategic decision. And once it is a part of strategic decision making, it's a completely proactive approach. It's not reactive. Traditional risk sometimes is reactive. And what is the difference between the two? Proactive is, I'm going to become wise before the event. Reactive is, I become wise after the event. So if we have the checks and balances in place before the onset of a problem, we are proactive. So enterprise risk management, or the new perspective of risk management, says precisely this: be proactive. Look at the kind of developments which have taken place. And in this context, look at the kind of newer risk which is emerging. What is important today may not be important tomorrow. So what will be the newer risk? And what I'm also implying by this is that in the traditional mindset of risk, the focus was only on loss prevention. So if there is an earthquake, if there is a theft, these are going to be the measures, which is not so in the case of an ERM. Okay. So, so the point we have tried to make here is ERM gets embedded in all aspects of an organization, all functional areas of an organization. And if I put it in one word, it gets embedded in the culture of an organization. And once it is embedded in the culture, then I think it is something which will be followed. So, and okay, one more thought which has just come to mind. Normally when I say risk, or when somebody says, oh, there is a risk in this activity, what would you say? You say, okay, it's a negative event. We'll say risk is negative. ERM says risk is not negative. So traditional risk was only downside. ERM is both upside and downside. What does it mean? An organization, if it looks at risk carefully, can also benefit from risk. Okay, so it's not that if I'm going to face a risk, I'm also always going to have a loss. So, why I'm giving all these dimensions to you. All these dimensions are going to help us in the research which we do. Because we need to keep in mind that this is the backdrop in the context in which we would want to develop. One more dimension which I want to add, which has come up specifically after 2000. We all know the role of credit rating agencies like a CRISIL and an ICRA and a CARE. In fact, 2-3 years back, there was a big hue and cry about Moody's downgrading India. Moody's had downgraded India to Baa3. And that was a time when our respected Arun Jaitley was the finance minister. And I remember that, they requested Moody's and Standard & Poor's, please revise our rating to at least Baa2, because that was only one level above junk, which did happen after 2 years. So a lot of pestering, persistence, telling them, okay, our economy is not so bad. The point is, the credit rating which is done by these credit rating institutions. Earlier, risk management was not formally a factor in credit rating. But if you look up 3-4 years back, ERM is now formally a factor in credit rating. So whether it's international credit rating agencies, at least I can say for sure for international credit rating agencies, for them, enterprise risk management and how organizations are managing their risk has become a formal factor in credit rating. Okay. Why are we giving so much of emphasis to ERM and risk? So, and that should also help us understand the reason for the proposal here. The point is, the main, if I put it in simple language, main benefit of ERM or risk management or understanding risk management, both for auditors and senior management, is it increases the chances of survival of an organization. It increases the profitability, reduces the cost. If we talk in the basic language of the survival of an organization. So with this background, wherein now we appreciate and understand that the change perspective of risk is not the traditional perspective of risk. It's a newer perspective, and that is what we would want. So what are we trying to say? Auditors have a new perspective. Their roles have changed after the kind of events which have witnessed, the kind of change which have happened in technology. Senior management role has changed. The perspective of risk has changed. So all of them have changed under a new umbrella. Let us all put it together and see how it works. My purpose in giving this slide of snapshot of key risk areas and auditors and CFOs' role therein, because this helps us in a questionnaire analysis. When I was even preparing a proposal, I was trying to, and a good researcher always looks at both primary and secondary data. Now, primary data, the only thing we get is reports of consulting companies, both in India and abroad. So we do have these reports. The data we were not able to get. I'm still trying for the data part of it. How do we move forward then? So the basic focus of our analysis here is a questionnaire method. And I will tell you, because I have also prepared the first draft of the questionnaire. So I'll just give you a little idea of some of the key questions we have put in the questionnaire. Now, the key risk areas for auditors and CFOs was helping us in understanding the framing of the question, the framing of, the areas where we need to get information from senior management and people who have a role to play in organizations. See, if you look at technology advancements, innovations, and disruptions, the point is we would want all of them to have a futuristic perspective. History is great. If we are only going to use historical data and predict the future, we can go a lot more wrong. And let me also make an important point here. The global financial crisis, when we read about the reasons for the failure, the important reason for that failure given was the model approach, the quantitative approach. The qualitative approach was missing. So that is where, we want to encourage that thinking approach. So please do not assume that there will be a model, there will be a theorem, and we will write QED at the end. No. Most of the working in today's environment, even though we are data-driven, may not happen like this or may happen only partially. The other 50% should come from qualitative data. So we would want to understand from the crisis also. So, how we can use technology to emerge from the crisis. So see, one way is now, 2 years back, if somebody had asked me to deliver a lecture online, probably, I would have my doubts. I said, no, it's not effective. But now, when this is the only way out, we try and refine the process. So let us look at the role of technology as a process to emerge from the crisis, as a process to refine our learning better. Okay. There are a lot of risks, which in fact, a lot of risks, which I'm also going to emphasize here, are directly or indirectly as a result of technology. If you look at the business continuity and crisis response, this is what I was trying to mention also earlier, that a lot of times when you have responses to a crisis, like a disaster recovery plan, which I mentioned, rarely they are successful when you actually put it to practice. So I'm not saying it's a failure 100%, but in a real crisis situation, they may not, be up to the mark as we would want them. The point here is, when you talk of a crisis response, with the emergence of newer risks, organizations also need to have a sound contingency planning. And that is where, you need to look at this. There's another word which I'm using here, business continuity planning. Business continuity planning would be if something happens to A, then B takes over. B and C and D. Now, business continuity planning, which was never recognized as an important dimension of risk management, was given a special focus in enterprise risk management. So if we teach a course on enterprise risk management, business continuity planning is a good part of, the understanding of the enterprise risk management course. I'm sure we understand regulatory compliance, because this was the typical role of all auditors, even for the managers. In fact, even now, ensuring compliances is the way forward. And a lot of times, if you talk to many senior people or the company secretary in an organization, they say, oh, we are all the time only doing a tick in the box, So these are the 6 requirements, and we are trying to ensure that, we fulfill all the compliances. Okay. The point here is technology changes, disruptions have also given us a newer risk, which is called the cybersecurity risk. And I'm trying to link into technology advancement because, when you're getting a cybersecurity risk, or I'm going to, as mentioned later, you're going to work from home. All this has also exposed our information to a cyber threat because we are losing the confidentiality of the information. And a lot of cyber attacks, because there is interdependence of the global economy. So the cyber attacks are also because we are sharing a lot of our personal information. Third-party risk has again become important. But this is a risk which auditors always recognize, but senior management rarely recognizes. Because what are we doing? For a consulting company or even for a lot of other companies, we grant third-party access to various, I would say, to various networks, because of which there are data security breaches. So a lot of times, okay, the total completion of the work is 4 steps. Second step, we give it to an agency. And once you give it to an agency, what is the kind of risk involved? Because they are also carrying out an important part of your function. Cybersecurity, which I have just mentioned, because you are sharing your, the network at home, and you're sharing your screen space, all that subjects us to the cybersecurity attack. And then digitization, need not emphasize it more, but we do understand that digitization is an important risk which organizations are facing. Could be algorithms, could be artificial intelligence, could be a lot, or robotics, entire work is being done by robots. So how these technologies are going to impact going forward. So the thought is that they have disrupted operations. They are both disrupted and they are facilitating also. So it's both ways. Now, how a disruption can be a facilitator? Now, that is what is actually risk. It's a disruptor and it is a facilitator. And this is the latest newer risk and challenge in the current VUCA world, as we say. Integrated risk management directly arises from, what I said about the enterprise risk management, wherein we are not looking at silos, we are not looking at a bottoms-up approach, we are looking at a top-down approach. We are looking at compliances, we are looking at strategy, we are looking at operations. So I'm sure we understand it's not only strategy, but even operations in terms of our processes, in terms of our systems, which can go wrong. And then the business resilience is an important factor because it talks about how soundly we can manage our crisis, how, the kind of systems we have, the kind of backwork we have, how strong it is to adapt to changing circumstances, and not only adapt, but, be the sounding board, as I would say. So it's not about putting 4 locks in your house when you go. It's not about taking insurance. It's about managing these crises and coming through this in the best possible way. All these have been a great background for us when I mentioned very briefly about the questionnaire we have tried to prepare. Objectives of our research study, and Anujji was also mentioning very briefly. So the thought and the basic objective of my research study, and let me say I'm very thankful to the Institute of Chartered Accountants for giving me this an opportunity, because you need to just have some motivation to do research, and the motivation comes from the kind of facilitation which the institute is giving. So the focus here is, how can risk add value to the organization? What can be the important takeaway by including risk in my organization? And related to all what is being said here, what can be the key policy changes which we can suggest for developing a robust risk management practice and system? That is the basic objective of our work here. So an important objective is, can we arrive at a link between risk, strategy, and performance? Because only then you can be fairly sure that risks are being managed effectively. Let me also discuss one more point here to the entire set of 3 objectives. If you look at technology, and which I also briefly mentioned, technology is also actually adding to the financial risks. So technology is an enabler, and it is a risk, risk eliminator. It is resulting in increased risk. Okay. The modern, I would say, CFOs and auditors, they are undertaking a broader map for business planning and enterprise risk management. Okay. And, at any point of time, for the next few years, the nature of risk will keep on changing as technology changes. So technology is a big reason for financial risk, which we have. Now, a little more serious work now. So we have used this background. Please remember the background, I've not mentioned the empirical studies, but empirical studies are only what help us to arrive at these research questions. So it's a lot of empirical work, what a lot of consulting companies have done, which have helped us to arrive at these research questions. And I've used these research questions to prepare and frame a question also, which is just the first draft as of now. Now, see, the point is, in the coming times, so in the next 2 or 3 years, CFOs and auditors, they are going to assume a greater role. So the kind of pandemic we are in, these institutes, these 2 bodies will only assume greater roles. And not only assume greater roles, they will have a greater responsibility. Maybe you all as chartered accountants, your responsibility is going to go up in the coming years. And as I said earlier, the role of an auditor and management is intertwined. One cannot do without the other. So, what are the research questions which we plan to answer? What are the primary drivers of risk management for auditors and CFOs? How do auditors and CFOs ensure that they take a pragmatic approach? What are the changing roles and responsibilities for auditors? And is there a relationship between effective governance and risk management and organizational performance? So, what we are trying to do, we are trying to determine what matters most to the organization and how they move towards innovation, value creation, and value protection. in the most efficient manner, embracing risk management decisions in every nook and corner of the organization. Okay, so what are we going to do? We are going to identify strategic decisions, operational decisions, the legislation part, the regulatory part, and understand the likelihood and the impact of these decisions. So there is one question we have also kept in mind. Are we implementing ERM? Are we looking at the changed role of risk management only to conform to regulatory requirement or to improve performance? I think this is the bottom line question. If it is only for regulatory requirement, then we are not going to achieve much. But we need to, and that is why I'm mentioning about improving performance, improving value creation, improving value protection, and so on and so forth. Okay. Research methodology, as I said, is a questionnaire collection. And for questionnaire collection, one has or one will approach a lot of auditors and CFOs. In fact, I might request, Ravindra Kumar ji and Anuj ji also to fill up my questionnaire, because you being auditors have a lot of, experience on risk management. So I think if you also fill up, about 10, 20 questionnaires, I'll get a good auditor's perspective from the institute side. And that will, for responses, there is only one tagline: the more, the merrier. So the more responses we get, the better analysis we get. Okay? But that is a challenge. And I realize that it is a challenge because this is not a convenience sampling questionnaire. This questionnaire is specifically targeted to auditors and senior management, CFOs, not even middle management, rarely middle management, unless, organization structure is such that the middle level management is performing an important role. So the idea is to get a top perspective of the changing role, because they are the ones who are making decisions. So we are trying to get this perspective, and for any study, we are going to do a pilot study first, then we will collect the questionnaire, and then we are going to use a software to do the analysis, and then do a qualitative analysis of this also. Okay. Now, these are the risks which I have mentioned for a question. And then I have a few questions also, which I have given as a sample here. What are the key risks areas? Risk management and monitoring, ERM, data governance risk, cyber security, supply chain, third party, technology, business continuity planning. So these are just some thoughts which have helped us to go with the first draft. Okay, let me show you the questioning. These are few questions which I have, so I've just put in 6 questions here, and then, so most of these questions are on a Likert scale. The questions we have put in here are strongly agree, agree, neutral, disagree, strongly disagree. So a Likert questionnaire gives you your choices on a 5-point scale. There is a 7-point scale also, there's a 9-point scale, but in finance, most of the time, a 5-point scale works great for us. So you can read some of the questions which will tell you, or which will help you understand what are the thoughts of, our study here. Have you experienced a significant increase in your engagements in the strategic decision-making process, in your team's engagement in the strategic decision-making process amidst the dynamic and heightened risk-conscious environment? Risk indicators are, now see, this question is a little generalistic question. So for this question, our thought is, what are the risk considerations in decision making? If I talk about the second question, risk indicators are refreshed, timely, and are linked to the corporate goals and value drivers. This is a question on risk management and risk identification. Then are there announced expectations from the board audit committee? This is a monitoring risk management. Any researcher, when he prepares a questionnaire, should preferably do a grouping. I mean, I can't have 30 odd questions and do no classification. If we don't do a classification, then our analysis becomes a little impossible, or the results are not meaningful. So we've tried to do a little classification, and that's why, I mentioned about the key risk areas here. Then we talk about new age CFOs. Now, this question is basically about the expansion of the role of CFOs in times to come. And then our organization is prepared to respond to sustainability and climate changes. See, I've not mentioned climate changes, but I was reading this report of KPMG. They said the next big issue is going to be a climate change. So we will probably add 1-2 more questions on climate change. So so this question on our organization is, so I've not clubbed it under climate change, I've clubbed it a little more in sustainability. So we have questions on data governance also, which I have not added here. Cyber security is also. So, and then there is a question on, while auditors have been questioned in case of occurrence of fraud events, they have not been adequately empowered to deal with and prevent such cases. Now, this was an important dimension of the auditors, wherein we blame them, great. But what facility are we giving them? What is the cover they have? And this is a question which deals with empowerment of auditors. So so those are few questions. Then I have a few questions on third-party risks also, technology risk also. And then, these are few thoughts also which I've added in the question. This is not on a lighter scale. This, the idea was, when I was looking at, the whole empirical literature, always a researcher finds that everything can't be put into a question and an answer. So it was so difficult to put everything into a questionnaire. So, the thought was, let us put some open-ended questions. At least some people will respond to them, which will, help us in arriving at a good judgment. In addition, there are a few ranking questions also one has kept to give a complete coverage of the question. Yes, this is what we want, and that is the whole purpose of this, this study, how risk technology will reshape the auditors and the CFOs. Point is, figuring out how to manage the risk is a balancing act. And let me also say, the two need to work together. And that is why we have thought of this work also here. The point is, CFOs and auditors, both of them need to equip their function, their respective function, because they have a little difference in their function, with the right tools and surround themselves with the right team. And then, the rest would be a little more smooth sailing. In fact, there was again a very interesting article I was reading, and they were talking of the future role of CFOs. That's how I got this idea also. They say the CFO role is being reshaped by 4 major forces: digital, data, risk and uncertainty management, and regulation. Digital, data, risk, and regulation. And we do, to a certain extent, agree that these are the 4 forces which are going to, change the whole outlook. In fact, the point is, and that also gives you the significance of our work. The significance also is that in the coming years, due to the cybersecurity threats and other threats which technology poses, the situation may worsen with the cybersecurity and other risks. And if it is going to worsen, we might as well take preventive measures. In the context of auditors, there was this line which I was reading in a Deloitte article, and the most common audit phrase which is used is, "I don't want any surprises." So we also don't want any surprise. Let us predefine our role, and with that role, try and go it. What are the relevance and implications of the study? The relevance and implication of the study is to ensure that we provide some guidance in this uncertain path of technology and the kind of scenario we are looking at. And the fact that there may be other newer risks which may come up. So what could be the certain ways in which to mitigate the risks, certain ways in which we can take account of these new risks. So don't we say forewarned is forearmed? So if I know that there is a particular risk, at least some measures will be put in place. So the point is, the basic relevance of our work is that the CFOs and auditors need to balance their existing concern and their existing roles and responsibilities to create the right complex risk management environment. For any process to be complete, people are important. So please, technology is important, but we do recognize that involve the right kind of people. Ensure that they are a part of your process and successfully they help you to manage the risk. The point is, the risk will continue to evolve. This will continue to evolve. So how do we take account of this? So whenever there's a startup, and a startup comes with, let's say, a product 1 and a product 2, the advice we give in terms, at least theoretically, for a startup is that when you come to the market with a product 1 and a product 2, please ensure you have product 3 and 4 and 5 in your pocket, because somebody might imitate your products very fast. So the same logic here is, since the nature of risks continue to evolve, we need to think about newer risks and accordingly take them. And the other relevance of our work also is that high-profile companies, one has read, they are spending millions and billions of dollars and rupees in data breaches that have exposed the private information. And once your private information gets exposed, the kind of risks you will be exposed to. I do think this is the last slide. And this is like one of the quotes which says that what clients are looking for, not just a rear view mirror, but a view through a windshield, so that they learn how to navigate the risks, opportunities, changing regulations, and the competition which come up. So with this, understanding of the role of the newer role of auditors and CFOs in addressing risk management, I put a stop. And once again, thank you to the entire team here, especially the Pali branch and the research cell at the Institute for giving me an opportunity for helping us learn, giving me an opportunity for this project. And I do hope some meaningful results come out of this work. But thank you once again for your patience listening. And I look forward to suggestions from someone. Thank you. I'll stop.
Thank you, Madhu ma'am, for your nice deliberation. It was a really very wonderful session, and hope all the viewers has enjoyed this deliberation. So now I request. So now I request Chairman C. Anuj Goyal ji for taking up the question answer session.
Yeah, thank you, Dr. Amit Agarwal ji. And I'm really indebted, really grateful to Dr. Madhu Vij ma'am for very nice deliberation. And thank you, Team Pali, our C. Ravinder Singh Pawar sir, and Ruchir Baheti ji, our Honorable Chairman of the Pali branch, Vice Chairman Lalit Talesra ji, Dhanpat Raj ji, our Sikasa Chairman, and of course Secretary Mansoor Garg ji. We are having a lot of queries, and we are having from Vadodara Satyanarayan ji. He is asking role of internal auditor, who is family member of promoter company, and impact of their clean report in spite of irregularities and consequences to statutory auditor. I think Ravinder Singh Pawar sir will respond this.
Sir, my little submission in this regard is there is no family member as far as the professional is concerned. When a doctor treats his family, whether he treats as a professional or treats as a family member. So I think family member does not come into the picture. We are to do our duty according to our professional capabilities and responsibilities. That is my little submission. So that word should not come in. We must do our job professionally, independently, and up to the mark. And now Chairman sir will elaborate on this.
Madhu ma'am, you want to add something?
I just hear the question, but I am really thankful to Ravinder ji for saving me and saying a very right comment that, see, when you are an auditor, you are a professional. And then you are going to do as per what your professional duties are. And then you have to follow all the right protocols. So that would be my submission.
Yeah. Then we are having another query of Mindal Kant Banerjee ji from Kolkata. Industry-wise audit tools should be developed to enhance the quality of audits of companies, especially for listed companies. Further, Ind AS audit practice should have guidelines to mitigate risks. Yeah.
What is the question? What is the question?
I will repeat again. Industry-wise audit tools should be developed to enhance the quality of audits of companies, especially for listed companies. Further, Ind AS audit practice should have guidelines to mitigate risks.
I think I think as of now, see, the whole focus which the auditors have is on, as I mentioned, also related to compliance and internal control system. When you're talking of industry-wise, I mean, I'm not very sure if the audit profession gives that industry-wise, but maybe you all could add, you all are seniors, chartered auditors. But industry-wise, I think becomes a little difficult because the audit profession is about compliance and it was the best practice. So I would say that the role, whichever industry you are in, is to provide insights on the key risks which that particular sector is facing and how to manage them. And one answer also to this could be that you have to ensure that, all the rules, regulation, compliances have been followed as well. That would be mine.
I will request Dr. Amit Agarwal ji, Secretary Research Committee.
Yes. Yeah, ma'am, if I correctly understood the query of the viewer, is a suggestion in form.
Okay.
Rather, a query is a suggestion to the proposed research study that we should develop some risk management tool industry wise. And I echo with his suggestion because industry specific risk management tools, if we develop, it will help industry because in some areas, forex forex hedging can help whether a proper hedging techniques are followed or not somewhere some other it may not be universally applicable to other industry, so that way it's a suggestion to the proposed research study.
So definitely I will take it into account because it's a very valid suggestion. And in fact, to mention here, in the questionnaire we have prepared, we are asking the respondents to tell which organization, which sector, and which level, and for how many years. So the idea is that we do want to do a little segregation of the results, but as you have rightly said, I'll do it as far as possible in terms of sector-wise. And maybe, as you have said, I could add an open-ended question on this. We could add an open-ended.
We'll do that. I will request C. Ravindra Pawar, sir.
Sir, my submission in this regard is the purpose and process of the audit will not change. Auditing will remain the same, but particular industry needs particular specific tools so that the CFOs or auditors can reach to a particular right conclusion. So that should be skewed towards particular industry, but the overall purpose and reporting objective will remain the same. So I think we are talking of the auditing tools for a particular industry, not for the reporting purpose and all that. So that results may be more accurate and more correct and more relevant and more useful. I think that is my point of view.
I will now actually request Ravinder ji to fill up my questionnaire because I think you have very
Chairman sir will, his secretariat will do.
अच्छा अनुज जी को भी बढ़ना पड़ेगा आपको भी बढ़ना पड़ेगा. I think it's only going to improve the work. It's only going to improve. Thank you.
Yeah, thank you, Ravindra sir. Then C. Arun Kumar Srivastav ji, very senior member and my good friend from Lucknow. CARO 2020 should also have some reporting requirement by auditors also. Number one. And number two, how loss of profit policy can help in risk mitigation in today's scenario. So first query is CARO 2020 should also have some reporting requirement by auditors also.
I think this is again more like a suggestion because CARO 2020 should also have some reporting requirement. So this is a suggestion and I think we can add it as part of our work, but I think that's what I thought would be.
And how loss of profit policy can help in risk mitigation in today's scenario?
See, if I talk about loss of profit policy, I remember when we were doing the last part, the relevance, we have emphasized that the whole purpose of this exercise of our work here is one, to have the right people into the processes, and second, have processes that create value and take care of the profitability. So the point is, losses I'm not talking of. The point is, I'm talking of a good practice. So the idea is that if we have the right risk management thought in place, right management people and processes in place, we would be in a position to create and add value, ensure that the profits are taken care of and the costs are taken care of. So that is the whole purpose of the forward-looking. See, we are emphasizing it's a forward-looking approach. It's a looking at the risk from not a silo perspective, from an overall organization's perspective. So the focus, as I said at one point also is, you need to look at how to manage uncertainty, ensure that there is a forward-looking approach. And when I say value add means that, you know, it will take care of the profit or loss position of the company. So this is my response.
Yeah, I will request CA Ravinder Pawar sir to raise the next query.
Ma'am, there is a question from Mr. Vikas Chaudhary, Delhi, whether internal auditors and independent auditors' role is different in risk management. If yes, what should be the approach of respective auditors in risk management?
So you're talking of internal auditors and independent auditors.
Independent auditors.
Okay, I think
The role is different in risk management.
I think independent auditor means statutory auditor. Right? Whether internal auditors and independent auditors' role is different in risk management. If yes, what should be the approach of respective auditors in risk management?
see, the point is,
रुचि जी आप भी respond करना चाहें चेयरमैन सर तो आप भी you can also respond.
पहले आप सीए से बोलिए ना, फिर मैं जरा I will
नहीं over to Dr. Madhu Vij.
Okay, I'll say a little, then Ruchir ji and all can other. See, my limited understanding says that auditors are morally and legally responsible when they put in their signature. So you are verifying, if I understand correctly, you are verifying that the statements are true and correct to the best of your knowledge. Whereas the rule for independent directors is that you are held liable for information which is discussed during the board meetings. So the nitty-gritty is not a part. Okay, and if an independent director is not a part, or not, I would say the chairman of the audit committee, then there's a little different role also he plays. Let me hear Ruchir comments and then I'll add on to it. Somebody, yes, somebody wants to add first or?
Yeah, thank you. Then CA Atul Puri ji from Delhi, what different or additional knowledge is required of an auditor to address risk management? Secondly, a brief is given in the appointment letter to the auditors of their scope of work, how this will impact. Another question is that this risk management may not be treated as management or providing management advisory services, which the CAs are not allowed.
I think, see, I am talking a little more academic perspective from what I've seen in the company where I am also.
Yes. Question जाननी है.
Okay, if I've understood the question rightly, it's talking about the role of auditor and the new auditors, I mean, the employment letter, what is written. Let me say that in today's context, the role of auditors has moved from compliance and internal controls to looking at all dimensions in an organization. The fact is, if you are holding him responsible when something goes wrong, you know, I can only give the case of an Enron and what happened to what happened to Arthur Anderson and even a Satyam and what happens to a Price Waterhouse. So auditors, there is always a team of auditors and auditors cannot say that A is my role and B is not my role. When you are verifying with your signature that the statements are true and correct to the best of your knowledge, then I think you do stand legally and morally responsible. Again, if I remember correctly, there was a case where for one of the company, I think it was Manpasand or what, I don't want to take names here. The auditors were with that company for 3 quarters. And that is also a rule that if you are putting your, I mean, you are with the company and you're verifying their account for 3 quarters, you are saying that the company is performing well. Suppose the company is making profits. Suddenly in the last quarter, you can't resign. So if my company, where I have put my signature as an auditor in first quarter, second quarter, third quarter, and I show a profit, and in the fourth quarter, let us say the company is showing a loss for the reason that I have not done the due diligence properly in the first 3 quarters, you can't really escape your responsibility. So it's very, very clear. In fact, the auditors are responsible, and because of their nature, they will remain responsible. This is my thought, which I know, I mean, which I think to a certain extent is legally correct also. Certainly.
Yeah. Thank you, ma'am. Thank you, ma'am, for responding this query. And the query was related to what additional tools should be adopted for mitigating the risk and addressing the risk. So, yeah, ma'am. So today,
Yeah.
yeah.
No, no, go ahead.
So can you hear me?
I can hear you.
I'm audible. Yeah,
Yes, you can.
ma'am. So it, I'm very much happy to share that the response we received from the audience, that very good suggestions received, and the very purpose of having this webinar served. I think a lot of good suggestions received, and most of the queries are not in the nature of query, but rather it is a suggestion kind of thing. We should, at this platform, I think the appropriate decision is, I have spoken to my chairman, that appropriate decision is we should receive these suggestions. Let us have a deliberation within the research secretariat along with the researcher, Dr. Madhu Vij, and along with quite few learned chartered accountants who understand the subject very well. And based on that collective wise decision, deliberation, we can come out with some solution, and if need be, these solutions can be incorporated in our initial proposal. So that way we will be, addressing these queries, and we have one very important query. So for that query, I would request Ravindra sir. Before that, I think Madhu ma'am want to say something.
I just wanted to make a request. Can you mail me these queries, because then I will.
Yes, of course, ma'am. Of course, ma'am. Of course. We first what we will do first internally at the research secretariat level, we will be deliberating on these queries. We will also discuss with you as a researcher, and then need be we can form a group who can also further deliberate it, and need be after this deliberation, if something found to be added in the and I'm quite sure it is to be added, very good suggestions received, so we will add in the scope of the work, and then we can take up the study for further proceedings. So with these words, I request Ravindra Pawar sir for next query, sir.
Yeah, I will take one query from CA Ashish Gupta ji from Noida. My very good friend, since auditor is supposed to be a watchdog, not a bloodhound, then whether identification of risks in any organization changes his role to a bloodhound or not. May I request Mr. Pawar to respond?
Chairman sir, I am a very small person to answer this fundamental concept relating to auditors. In my view, watchdog means anybody who is well aware, well competent to see, watch and protect what is happening in his jurisdiction and report properly. I think that is the concept of watchdog. Latest and very, very extreme situation relates to bloodhound position. In my view, if one is watchful and he's done his first job very well, then the second stage will never come and will never be required. One need not to be bloodhound if he performs the first stage, first duty very, very diligently, very responsibly. That is my own submission.
Yeah, thank you, Pawarji. And we are, of course, have to conclude before 6. We are leaving my brother C. Sanjay Jainji from Jodhpur is appreciating the efforts of the committee and deliberation. And thank you very much, Sanjay Jainji. And I think Dr. Amit Agrawalji want to discuss certain initiatives of the research committee and expectation from the members and the Pali branch in this regard, and then we will.
Thank you, Chairman sir, for giving me an opportunity again to discuss the initiatives and the expectations from the members at large and the hosting branch. Sir, first and foremost, I would request that viewers are either associated as an auditor or as an employee of an institution. So kindly motivate the entities for participation in Excellence in Financial Reporting Award. Number one request is for this. Second, through branch, I would request, and the viewers, I would request, if you know the chartered accountant who really want to contribute in the field of academia or in the research, may kindly motivate them, popularize this scheme, ICAI Doctoral Scheme, and if somebody really, because it is a thought process of our learned council that institute should support our members, but after passing the chartered accountancy, sitting idle for 3 years for pursuing a PhD degree or the qualification, institute thought fit that we should compensate this opportunity loss in way of sponsoring rupees 50,000 per month up to 3 years. So it's a good initiative taken by the Council of ICI under the able guidance of C. Anuj Goyalji. So I would request popularize this kind of schemes among the members, so members be benefited from these schemes, because first we have to popularize it, otherwise nomination would not receive to us. So this, through these initiatives, I think we can reach to members and tell them and motivate them to apply. So these are the two things I would like to share here for International Research Award, because deadline has gone and jury meet date has already finalized. So I would not, for this year, we have closure of nomination, but for next year, you can popularize researchers who can nominate, or you can nominate other researchers for this ICAI International Research Award. And this research project scheme is open round the year. For this, if you know the person who has done something good for the profession or having expertise in a particular domain and want to contribute for the profession, to meet out the out-of-pocket expenses, institute has came out with a scheme, right, research project scheme, wherein we can meet out the research expenditure. So I would urge Pali branch, we have already circulated scheme brochure documents to each and every branch of the institute. I would request them to please host this on their website so that member can be informed about the various initiatives taken by the Institute of Chartered Accountant of India. And we have a time constraint, so not taking much time, I would request CA Himanshu Gargji, the Secretary of Pali branch of CIC of ICI, to kindly offer a formal vote of thanks. Over to Himanshu Gargji.
Yes, sir. Sir, on behalf of Pali branch of CIRC of ICAI, I would like to express my gratitude to all the members present in the VCM. As Anuj Goyal sir informed that more than 5,000 participants were present. Thanks to all the participants for giving their valuable time. Special thanks to our learned speaker, Madam Dr. Madhu Vij, for giving the detailed clarity on the topic. I would also like to thank Sri Anuj Goyal sir, Secretary Research Committee, and Sri Amit Kumar Agarwal sir, Sri Anuj Goyal sir, Chairman Research Committee, and Sri Amit Kumar Agarwal sir, Secretary of the Research Committee, for giving Pali branch opportunity to conduct this seminar. At last, I would also like to thank CA, CS, and CWA Ravinder sir for being present throughout the webinar and sharing his valuable and important experience to us. Thank you once again so much, sir.
Thank you, Himanshu Gargji, our young and dynamic Secretary of Pali branch. I am really grateful, really indebted to Dr. Madhu Vij for our deliberation, and of course our leaders from Pali branch, CA Ruchir Baheti ji, Honorable Chairman of Pali branch, and Secretary, Young and Dynamic Secretary Himanshu Gargji, and of course CA Ravinder Singh Pawar sir for guiding us, for giving his value addition to all of us and responding lot number of queries also. So thank you very much, and I am really grateful to Dr. Amit Agrawal ji and C. Amit Agrawal ji and Kunal Sharma ji, who are contributing like anything for our research committee as well as Committee on Capital Markets and Investors Protection. And of course, more than 5,000 chartered accountants are there from each and every part of the world. So I'm really grateful, indebted for making this session very, very interactive and always participating in our research initiatives. And I'm quite confident that all of you must be taking very, very good care of yourself and your family members in this time of Corona pandemic. I will once again urge to take very, very good care of yourself and get yourself vaccinated along with your family members, so that we can fight from this pandemic Corona in a very, very effective manner. So once again, thank you very much, team Pali branch, Ruchir Baheti ji, chairman, Himanshu Garg ji, secretary, and all other office bearers of the Pali branch, Dr. Madhu Vij ma'am, and Pawar sir, and Dr. Amit Agrawal, CM Amit Agrawal ji, Kunal Sharma ji, and all our honorable viewers from each and every part of the world for this great session. Thank you very much. Thanks a lot.
Thank you.
Thank you, sir. Thank you very much.
Thank you. Thank you so much. Thank you.